Gold is not here to make me rich, it's to keep me rich. The attitude and the sentiment right now within the gold space and the mining space, I've never seen it any worse. But some of these companies are finding the mines of the future. I believe that we are actually going to see a very explosive market, especially going into 2024. Gold as a store of value for thousands of years is not going away anytime soon. Since 1971, when they clipped that link between the dollar and gold, we've got about a 9.2 to 9.5% compound annual growth rate in the price of gold, which has been incredibly stable, which is what gold is, versus the mining stocks where we've been in a bear market. We saw in Q4 a recovery, and just recently, just in the last few weeks, we've seen the miners and gold has softened up. But I believe that there was enough technical evidence that we are actually going to see an extremely strong year, and especially going into 2024, when the Fed is going to have to literally pause and or pivot, you're going to see a very explosive market. Call it within the next 6 to 12 months, let's give it that range. I think new highs in the price of gold, where we could see those mid-2000s level. So it's got me very bullish, and that's based on a myriad of things, but also when you get a consensus from so many different levels of money and investment, all the way from the top institutional dollars down to mom and pop retail, and everybody's just scared to pull the trigger and put any money to work, I am an accumulator. Within the gold space and the mining space, people just are not playing the game. The attitude and the sentiment right now is just, I've never seen it any worse. You've got a lot of accounts and portfolios in this sector that are down, similar to crypto almost, in the sense with the smallest companies that are down over 50%. Those are big haircuts. We've had a commodities and precious metals sector that has been underinvested in for decades, since the early 2000s. I believe that the biggest torque is going to come from the miners that are trading way down at the lower end, the back door, the back alley of the mining sector, where you have these tiny valuations, very, very, very little burn rate, cash in the bank. They're solvent. They've got money for the next year. They just may not be putting a lot of that to work to go drill. Some of these companies are finding the mines of the future, and they're releasing exploration results that in a normal market, in a neutral market, would have things, responding extremely favorably, are just not only not doing anything, then they're rolling back over and, going to new lows. It is cheaper right now for someone to buy into ounces in the ground and get exposure into a company that's got already proven reserves and or resources that are in the ground, even production too, versus going ahead and going and doing a drill hole, because they've already got the resources there, and you can buy into the per ounce in the ground value so cheaply that it doesn't even make sense for you to become an entrepreneur and go and take your axes and your picks and your drills and go out to Nevada and wildcat and see what you can do, because you can buy these proven assets so cheap. So eventually that brings in the bigger money in some of these other companies. Do you blow your wad and take everything down at once and deploy your money into a penny stock that's a mining company? You don't, but I think accumulation is very, very appropriate. And the more you're willing to go down that chain of market capitalization and value, the higher the upside. You can get good exposure into the space via GDXJ. I like to buy my calls at or in the money and then buy duration. And I'm using that leverage by buying the calls on GDXJ. You could do it on GDX. You could buy GDX, the producers, as an ETF and get broad exposure in the space. You're not going to pick the bottom. You're not going to get the cheapest prices that you're going to sell for those like 5, 10, 100x type of returns, unless you're willing to put money to work in an environment of uncertainty and fear like it is today. There is a lot of activity in these areas that I see going on that is very, very bullish and is not being reflected in the equity prices yet.